Hey, this is James with Yoreevo's November Manhattan Market Update, and I think there are two main conclusions from this month. The first is that demand continues to be pretty good, and the other is that the trends are getting back to more normal seasonality, what we would expect in any other year. So, to get to the numbers, you'll see that the second half of October, that if you recall from last month, was pretty strong. That continued as we went into November. So here we have that same chart that we were looking at last month where it shows the contracts per week. And you could see until the second half of October, we didn't get above 150 per week too many times. But every week in November, we were over 200, with the exception of Thanksgiving week here. And I think what's interesting is that this was about 160 units in Thanksgiving week, which, depending on how you want to look at it, is maximum a 3-day week. So really the contracts per day were actually stronger during Thanksgiving week, and maybe there's a little bit of an offset there, people trying to get contracts signed before the holiday. But regardless, even though this number is low, it's still a strong week. So basically throughout November, we had pretty strong contract activity. And then going back here to the numbers, so overall we were up 11% year over year. And I also thought it'd be interesting just to put some broader context to the market. If we approximate about 200 or so units per week in December, which might prove a little optimistic because December is usually a slower month, we're going to see overall contract activity for the year down about 25-30%. So you'll start seeing that number pop out as we get closer to the end of the year. And I also, one other thing that I thought was interesting in this month's data is that if you recall, the general narrative over the recovery has been the lower end has been stronger. And we seem to be seeing a little bit of that balancing out. I don't know if it's the higher end catching up or just getting back to a more normalized level, or the lower end buyers satisfying demand and the higher end market being a little more untapped. But here you see the contract activity by price point, and you can see pretty flat at the lower price points and then up around 20% once you get to the 1 to 2 million and 2 to 5 million. We could speculate as to why that is. I mean, obviously that dislocation couldn't last forever, but maybe with schools kind of getting opened, you had more families coming back, and families are going to buy larger apartments, which tend to be more expensive. So maybe that was part of it. Those buyers may have been out in the market, and those contracts for those buyers might actually be getting signed in November. But in any case, we're starting to see the high end pick up a little bit more. And then the listing inventory is the other thing that we can track in real time. And this is what I was thinking about when I was saying that we're getting back to more normalized trends. So you can see we were going up, 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 up. And then as you get to the holidays, you always see listing inventory taper down. So you saw that again. So where this is going to go going forward, probably continue to go down into December. Obviously, we're still way higher than we have been at any point over the last couple of years. So it's not like inventory is normalized by any stretch, but it seems like the trends that we saw coming out of lockdown, where you saw the inventory trends and the contract trends and all of that just going completely counter to what you would normally see, seems to be stabilizing and getting back to a normal seasonal trend. And then I have the price point. Here's listing inventory by price point. And then the pricing, I would just say generally no change. You really need a well-priced and or unique property for it to sell quickly. If you're pricing a 1 or 2 bedroom in a neighborhood like Midtown or the financial district where there's a lot of inventory and you're pricing it aspirationally, it's not going to sell. I mean, hard stop. You're not even going to get anybody inquiring about it. There's just way too much inventory. So you either need to price it aggressively, or you need to have a unique property that doesn't really have close substitutes for it to sell quickly. But as you can see, overall, we are still seeing some more activity. We continue to see year-over-year increases, which is encouraging. And now we're really going to be looking forward to the spring, call it February, March, April, when things start to tick up again. So everyone at Yoreevo, we hope you had a nice Thanksgiving. We hope you have a nice holiday season. And if you are in the market, if you're looking to buy or sell, and you'd like to dive into the specifics as to specific neighborhoods or property types or anything like that, we've been pretty active. We remain very active in all corners, all markets, all neighborhoods, all price points. So we're happy to share what we're seeing and always happy to help. So happy holidays, and we will see you next month.